So car insurance has gone up in some states 70%. In California, some companies got a 50% increase like that. In the last several years, they weren't even allowed to raise over 10% without going through court. So there's some major changes happening. States like Michigan, Indiana, Virginia, California, Georgia, all of these states, Florida, are having some major issues as far as the prices. They're skyrocketing. So to compare to what we've said in the past, we're seeing about an 18 to 19% increase year over year. I think personally that 2024, you're going to see a 20 to 30% increase on all car insurance. Some companies 18, most companies are going to be 30, some companies are going to be in the 50 to 60% range. They're claiming due to inflation, which is part of it, but there's inflation in all of the departments, and we'll dive into that a little bit deeper. The other part is the difference of wildfires and weather-related claims and the unexpected incidents. There's predictive models that can determine those, but those have not been as accurate as they could be. We're literally getting 10 to 20% more claims because of those situations. But according to what we use in our industry called the III, that's the Informational Institute of Insurance, I believe is the name. It's Insurance Institute. I don't know. It's our source. Like it's our guides and our numbers, right? So they've actually said we're seeing a 50% increase in property damage claims. These are actually claims coming in. And we're seeing a 40% increase in the medical portion. So the bodily injury that's actually injuring someone, the cost is 40% higher from the years in the past. So what's causing the car insurance to go that far up? And the main piece is the vehicle itself. There's a lot of new technologies. For example, there are some cars that have sensors in the windshield to prevent it from cracking, and if there's an accident, it's going to save your life potentially from it shattering into you. So there's all of these pieces that now require not only the larger cost for the material, your everyday glass repair person can't fix that windshield. It has to go through a calibration. So now the car won't even start in some cases if the door's left open. There's all of these pieces. I watched a TikTok where that actually happened. So I didn't even know that existed. Whether someone couldn't move their car because they opened it and it rolled back an inch and they was stuck in park. So they were just stuck there until someone helped them. Those are pieces that are preventable. There's electric cars and all of these extra costs. It's $7,000, $8,000, $12,000 to replace a battery. There's going to be an extra cost in the insurance. And when the insurance company can't price the model to fit those correctly, which is what we're having a problem with, because they can't go up that much. If they raise their rates more than what our consumers like us want, I don't want 20% increase. I want a 20% decrease. But then it's just going to crash the company. They literally will go bankrupt. The amount of people that can fix the car due to the 2021, we know what that was. And there's not enough people. So the wait time is longer. That's also costing the insurance companies because they now have to give a rental car for longer. On top of that, inflation does play the factor because now the person that fixes the car, the labor costs are more. The bigger piece is the medical portion. We're seeing a 40% increase in the average claim for medical. So what was a $10,000 claim is now costing to be $14,000 for the medical portion. What I personally think is the largest reason that we're going to see 2024 and going forward to have at least a 20 to 30% increase is the medical portion. It's not just what we talked about, the medical claims. It's more so the average judgment on a medical lawsuit. So what we're looking at from the Forbes article I just read was the median personal injury judgment has gone up by 320%. Great for the person that's hurt. You need to be taken care of. But the cost of that is astronomical. It's costing us more money. I'm not trying to make excuses because we all know that on the internet, a lot of people understand and most people agree that insurance companies are out to get you. I get that. Feel free to put in the comments, have the conversation. There are situations where I've seen that happen, but the average right now is every $1.09 that they pay out, they only take in $1. So they're a 9% upset just to get profitable. That's to break even. That's not to get the payroll up, not to get the investments up. Keep in mind, they have a lot of money in the bank. They've saved. They've been earning that income. But they're a little bit slow to react, so they didn't react quick enough to overcome this hurdle. By the way, if you are looking for a new insurance company, I'll put a link in the description below. Honestly, everybody can check it out, but if you are that person that is shopping, has good credit, has a nice vehicle, has all of those fits. There are a ton of companies that are fighting for that business. Link is in the description below. Otherwise, they're a for-profit company. They need to make X amount. You go to a grocery store, you're paying 20 to 30% because that's their profit margin. When you go out to eat at a restaurant, you're going to get 15 to 20%. That's their profit margin. That's how they operate. That's how they pay for the building, things like that. It's a business. And so for the insurance companies to come back strong, they're going to show some large increases. Some, like I said, will be 50+%. Average will be 20 to 30%, depending on the company that you're looking at. The last piece that is causing this wave is because of the inflation, because of the downtrend of the economy, there are a larger amount of people that are willing to drive without insurance. That is an additional cost for people that need to purchase insurance in areas that are already a high risk. Some states are seeing over a 30% increase in uninsured drivers. Are they trying to prevent that? Yes. But if at the end of the process, some people just can't afford the cost of the insurance, but they still got to get to work. I get that. We can all relate to that part of it. None of us want to pay the extra cost, but unfortunately by doing that, it's putting everybody at risk. For those that have to pay in those areas, you're going to pay more for that situation. I know this was more of a grim outlook and showed you the reasoning behind it all, but for those of you that aren't aware of why that's happening, there are ways to fix this. So the one thing that most people don't realize is not every company is doing this. Not every company has prepared in lacking of or has done a bad job of preparing. There are several companies out there that are doing well. They're not looking to grow, so it's harder to get in the door. You're going to need to prove that the car's in good shape. You might have to show them the registration. You may give a copy of your license, or if you're doing home insurance, you might have to take 5 photos of the house. There's roadblocks because when you are competitive, everybody wants to join you. And if that's the situation, they've got to slow that back off because then they will be like everybody else and not competitive. If you're looking for companies like those, most of them are through independent agents. Some states, they're what we call a direct agent. I'll link a video at the end here that goes into depth on what those are. But for those of you that are looking to shop it around, I'll put a link in the description below. Feel free to check that out. Otherwise, the part that you got to know is the next steps. How do I cut the cost down, or how do I know if I'm in one of those areas? 1, your agent should be able to tell you that. But 2, if it goes up 30% or more, then you're probably getting in one of those high-risk states. If your agent doesn't have a good reasoning that makes sense to you, or if you don't like the company enough to stay with them, I personally will probably cry a little bit, but I'll take my 20% increase because I know I'm a good fit and I know the fit that I have for the coverages that I want. It's not something that if down the road other companies that are similar to that have a better option, then that might be an option for me later. But right now, I know that there's not a ton of companies that are offering those better deals. If you are that low risk and you have great credit and you have good insurance, you've had it for several years, you don't have any major claims, you don't have a bunch of glass claims, not a bunch of towing claims, all of that stuff, you got to go below. That description below, that quote will probably help you out a lot. Otherwise, the next step is to check out my discounts video, which will go more in depth on the discounts that you have available. Or if you're just looking for the cheapest thing out there, I also made a cheap insurance video where you can find some of the cheapest companies that are offering some good policies. I'm Mark with Think Insurance. I'll see you in the next one.